We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Egon von Greyerz, founder and managing partner from goldswitzerland.com. Thanks for joining me today, Egon. Tom,
always good to be on your show. Look forward to our talk.
Excellent to have you back. So how quickly can we see the Biden-Yellen team this year being able to push the dollar down that final 1%, since it's already lost 99% of its purchasing power since 2013?
Well, I've been involved in markets all my life, which is, of course, more than 50 years of working life. So I've learned one thing, which is patience. Now, the trend. The trend in what's going to happen to the dollar, or what's happening to the dollar, has been clear in this phase of the global economy. Has been clear since 1913. We know that the dollar has lost, in real terms, 99% since 1913. Now, and it's lost 85% since 2000. So the trend is clear, but it doesn't always happen the day that we expect it. So, the fact that we know that they are going to continue to print unlimited amounts of money, and that, I had an article some time ago that took all the presidents from 1980 up to now, and on average, the U.S. debt has doubled every 8 years. The Trump obliged, more or less, so he took it from 20 to 27, almost 28 trillion, which was the stopping point which I had forecast, on the way to 40 trillion, doubling from when Trump started. Of course, he didn't get his second 4 years. So that's what Biden and Yellen are going to do. And in my view, they're going to go a lot higher than 40 trillion in the next 4 years. But that doesn't mean that the dollar goes down today or tomorrow or the next day. It just means that the trend of the dollar is down, and there will obviously be volatility and ups and downs. But the dollar will continue, and as I said, you're down 97, 99%. You're down 97 since 1971, for example, when the gold standard was abolished. So that the final, whenever you start measuring the final 1 or 3%, it's going to happen, and it's going to happen. I think in this year it's going to happen very quickly now. In the next 4 years, I would see dramatic falls in the dollar and dramatic problems in the world economy, and therefore the dollar is going to reflect that. And of course, and also the other currencies. I think the dollar will lead probably. But as we have talked about many times, the race to the bottom is clear, and there's no prize for winning that race. The dollar might win it, but there are lots of other smaller currencies who won it already. The Bolivar in Venezuela, etc., Argentina, so many. So that will happen, and of course that gives us a problem, which I'm sure we're going to talk about later. Is when you talk about prices or anything, houses, commodities or gold and silver, when you talk about targets or that's pretty meaningless, because if you don't say what's the dollar or what's the currency worth at the time when you measure it, that's more difficult for most people, of course, because no one has any other measuring stick than their currency. But to talk about gold at 10,000 or 100,000, whatever, you've got to ask the question at the same time: what is the dollar at that point? Because otherwise, what's the dollar worth? Because otherwise, that price is meaningless. If you say that as I said, in the beginning when I started, I said I think we will see $10,000 in today's prices, in today's terms. I think we'll see that, and that's, at least that gives a reference point. So that's quite ambitious, but I think that's not impossible at all. So back to your point, the dollar. The trend is so clear; it's so easy. Any child and look at this dollar on any time scale except for the very, very short term. And you see that trend from 1913. It's just going down and down and down and down, with a few exceptions of small corrections on the way. So, that's anybody could forecast that. Anything that's gone down already, let's say 99% in 100 years and 97% in 50 years and 85% in 20 years, that will absolutely continue that move to the end. I'm quite convinced about that, and I hope not hopefully, but I would expect to see that in my lifetime. Although I'm a lot older than you are, but still, I would expect it to accelerate now. But it doesn't matter. We're not looking for winning a prize and forecasting a specific date. We're just looking for protecting ourselves against the inevitable destruction of paper money.
Absolutely, Egon. So there's another article that you guys recently posted on the site, and I pulled an interesting quote from there, and it was by Hume, and he said that more is not more. So how does this apply to debt, and how does debt mathematically destroy long-term growth?
Yeah, so that is my colleague Matthew Pfeifenberg, who is American and also lives in France. He went to Harvard, so he obviously quoted Hume from his days there, and it's pretty clear to anyone with an ounce of intelligence that these policies, whether they were Keynesian or whether they're now called MMT, whatever, this policies of believing that you can solve a debt problem with more debt. I mean, they're absolutely ludicrous. And any central banker or government official, I mean, they should be shot for actually presenting such incredibly stupid solutions. If you just went home every night and I'm going, we're a bit short of money today, and your wife wants more money. I'll print a few more. Sure. If you do it at a small level, nobody would notice. But if you try to solve government problems and continuous deficits, I think the U.S. deficits are, they're now, they're with a few exceptions, they've been going, for instance, since the 1930s. Every year there have been a few years that have been exceptional, but they just continue. And we know, and that's why we have to take it back to our own little world. That you cannot continue to live above your means forever. You can do it for a short period of time, but in the end, you've got to pay back your debt. But now, of course, governments say, well, debt is basically free, because it's negative interest rates or zero interest rates. So therefore, it doesn't cost us anything. But, you have this thing with the capital, you've got to repay the capital. But also, every time, if your money supply is 100, and you issue another 100, it means that the value of your money halves. And therefore, in the end, as we just discussed with the dollar, the currency will be worthless. And this is how this era is going to end, of course, because we will have hyperinflation at some point. Every period of hyperinflation has been caused by the collapsing currency and not by increased demand. And that's why even now, when we have, as we measure inflation, we have no inflation. But we know that's a con, of course, because first of all, we have massive inflation. Inflation is really increasing the money supply, and we have massive increase in the money supply. It's just that it goes to other areas like assets of stocks and bonds and property, etc. The assets of the wealthy, and it doesn't go to normal people who are getting relatively poorer the whole time. So therefore, we are seeing inflation, but even and now, for the first time in some time, we're also seeing now inflation in certain areas like commodity prices, and food prices are up dramatically since last year, and commodity prices in general too. So inflation will come, but the acceleration of inflation that we will see in the next few years will come from the falling currencies. So yeah, coming back to Hume, you cannot solve the debt problem by printing more money. And in the end, of course, all bubbles always burst. But I as we discussed before, I've been involved with this particular business of trying to help people preserve their wealth for 20 years with gold and silver. And I've learned one thing, is to be patient, because things, even if you and I see them and we see clearly that this is going to end badly, it takes longer than we expect, because we live for such a short period within eternity, and therefore when we see something, we think it's going to happen now. But it doesn't happen that quickly. Will it happen in the next 4 years with this buyers, I call them, Biden, Yellen? I don't know, but I think there's a very high chance, because these two are the dream team for printing unlimited amounts of money. I mean, they're the perfect team, and they're saying that they are going to print money. And of course, it's one thing printing money for the deficits, which they will increase dramatically. But then you have the whole of the financial system, which they probably will have to save at some point also. And then, the banking system, and then you have the derivatives on top of that. So at some point, I could see monumental money printing. And that could happen in the next 4 years. But it doesn't matter. We're not here, as I said, to win a prize and don't forecast exactly when it's going to happen. What is interesting and important, and vital actually for people, is to protect themselves rather than to worry about when it's going to happen. It's like now we're seeing in the silver market and gold market. So there was this speculation, you might come on to this, but this speculation on this Reddit group and Wall Street Bets and GameStop and all of that. And they took out all the shorts and then on GameStop, and then it collapsed back again. And it was the same going to happen in silver. And so you see more gold buying in the market and silver buying when this happens. But, if people believe in protection and in gold and silver as protection of their wealth and insurance, they should buy it when it's low, not when it's high, and not rush in or when everybody talks about it. That's speculators. There's nothing, and wealth preservation is nothing about and nothing to do with speculation. It's all about long-term protection of your wealth.
Interesting, Egon. So as you were mentioning inflation, let's talk about some of the places that inflation is going to really show itself, and maybe some of the other sectors that will see deflationary trends.
Yes, so that's correct. We will have a combination of inflation and deflation in coming years. If you look at the bigger picture first, I expect that we will get inflation, and then at some point in the next few years, we will get hyperinflation. Once hyperinflation starts, it comes out of nowhere and it goes so fast. You can look at any period in hyperinflationary countries. It happens so quickly. And the Weimar Republic, in a couple of years, it went from nothing virtually to millions of percent. So therefore you can't, so we'll get this hyperinflationary period, in my view, and then, unlimited amounts of money will be printed, which will have no value. And then thereafter, I think you will have a deflationary collapse of the system. That's longer term. Short term, now inflation will slowly start, and it is starting, I said, within food areas, within commodities, which we have been expecting for some time. And so you will have it in those areas, commodities, food, services, etc. You will have major inflation. And then in all the asset bubble areas, which is, of course, stocks and bonds and property, where you've seen massive inflation in the last 20 years at least. You can go back a lot further, but in the last 20 years at least. And there you will have a deflation. Now, deflation can be a relative effect, because you're not going to, of course, if inflation in a lot of areas is thousands of percent or whatever, then of course, so if you somebody before earned 100,000 a year and he might earn now 10 million a year, of course, then you're in nominal terms, let's say a house is not going to go down in price in nominal terms, but in real terms, it will go down dramatically. And compared to gold or compared to food prices, etc., all of these assets that have gone up fast in the last few years or last 20 years, at least, they will relatively, or in real terms, come down in price dramatically. I mean, I've been saying, and I still think that's going to happen. I've been saying that gold, for example, in real terms, or the Dow against gold in real terms, got to go down at least 90-95%, and that's not unrealistic at all. I mean, that will take the Dow gold ratio to a half to one, a half Dow to one gold. I mean, that's nothing. We were 1 to 1 in 1980 when gold was 850 and the Dow was 850, and to take it down to half to one. I mean, I think that's a given, and it could even go down by more than that. Could go down by 99%. Sounds dramatic, but remember, in 1929 to 32, the Dow went down on its own 90%. Not even the Dow gold ratio took. So I think these changes in relative values, of course, they are going to happen in my view, but not only that will lead to the most massive wealth destruction ever in history. And nobody's prepared for that. Nobody, because it's been too easy. Everybody has been riding this asset boom for so long, and they think that it's underwritten by central banks forever. Nobody realizes that it's underwritten by debt and absolutely worthless pieces of paper that they call money, that they're just printing by pressing a button. And then it goes into the stock market, and then just, the stock market goes up and up and up. That's not real. And that's why, back to Hume again, that's why it doesn't work like that. It's not going to happen. And of course, I wrote an article last week and referred to a Swiss doctor, a very famous doctor called Paracelsus. And he said that, and he was also expert in toxicity, etc. And he said that, everything, basically all the elements are poison in the world or toxic. It's only a question of the quantity. And, the right quantity of debt is fine. Too much quantity is totally poisonous and toxic. And that's what we're seeing now. And the same with everything. You can just take water. Everybody needs water and a certain quantity, 1 to 2 liters a day, whatever you drink. But if you drink 10 liters, you probably will die, or 20 liters, because then your kidney will not work, and you won't produce the salt that the body needs. So everything, even good things, too much of it, that creates poison. And we are living now in a toxic world where everything is poisons, and therefore it's just too much of everything. It's too much debt, too much printed money, too many assets that don't have the value that they pretend they have. And it's all supported by printed money, which has zero value. And when the world realizes that the money that on the debt that's supporting this has zero value, so will the assets also that this debt is backing, and that's going to happen. That's why we'll see a dramatic shift in wealth in the coming years. That'd be tough for the whole world.
Egon, as you're talking about the basically the true price discovery of these assets, let's say, I'd like to take kind of a counter example. And why don't you kind of show us that by telling us how much paper gold is traded in comparison to actual mine production per year, and how this really affects the true price discovery of gold.
Yes, I mean, it's so fascinating because gold is a relatively small market. But the paper gold that is traded is between 600 and 800 times or 850 times the actual gold production, per day, per day. And this is primarily, that is not COMEX, primarily the LBMA banks, the London Bullion Market Association banks, the bullion banks, primarily in London, but also in New York, of course. And this is such an interesting area, and no one has a full insight into it because it's all under smoke screens. So there are a massive amounts of swaps, gold swaps outstanding. And that are, trading on a daily basis. All of that trading in London between the LBMA banks, 99% is paper. There's some small net amount which is settled by physical gold, but the rest is paper. So the BIS can, through their swaps, basically create paper gold that they lend to the bullion banks. And the bullion banks can most probably even keep that outside of their balance sheet. So nobody sees it. And they can then use that to leverage their own positions. And in my view, all of this is done to just, keep the gold price down. And as I said, no one has the complete picture because a lot of this is, as I said, outside normal balance sheets and reporting requirements. But that's, why should this relatively small gold market where most of the gold is static, why should the trading be so massive on a daily basis? That's just incomprehensible. But that is, in my view, because all of these swaps, they have to juggle with these every day to keep the market afloat and to protect these short positions which are maintained in order to hold the gold and silver prices down.
And January has already been a very turbulent month for gold. So tell us a bit more about how the 1.4 million ounces of gold that was dumped on the market on January 8th, how that is playing into exactly what you're saying.
Yeah, it is fascinating. So, you wake up in the morning and gold had already been coming down from higher levels at that point. And then, within a minute, gold drops $75 and there is no price in between. This is 9 o'clock London morning time. No price in between. And it just collapses. Or $75 is not a collapse, but, no sane trader who wants to keep his job sells his position 1.4 million ounces in one go at a price 75% below the market price. So, that is the clearest sign of a manipulation that you can see. And that's, we have seen that over and over again, in the last 10, 20 years, and it happens at regular intervals. So, that is, as I said, clear evidence that there is a manipulation. But, you have a lot of people, including Gata, that are trying to dig into these things and reveal these manipulation moves that are taking place. But of course, they get nowhere. All investigations are stopped and they can never get any evidence. And then every now and then bankers get caught for manipulating the market. But that's not on this. That is just small manipulation. And then a trader gets fired and the bank gets fined, a few million or even billion sometimes, like JP Morgan. And nobody says anything. And the trader gets fired. Of course, it's the whole of the bank to the very top is obviously totally aware of this. But as we know, no one ever gets fired at the top, not even in the 2006 to 9 crisis. No one got fired. And the only ones who get fired are some trader, just a token gesture, get rid of a trader who was not at all the guilty one in this, in almost all of the cases. So it's interesting. It's BIS, Bank of International Settlement in Basel, which is the central bank of the central banks, basically. There you have every employee has for life total immunity against everything, total immunity. So they're like diplomats, but they are dealing and to a great extent in gold and silver, they're trading this. But whatever they do, they can never ever be accused of it, and no one can take them to court. Fascinating. It's a great position to have.
Absolutely, it seems like immunity would be a great position to have. So, as when we see the value of gold and silver really start to rise, how prevalent will fake gold and silver coins become as the value really starts to accelerate?
Well, of course, the market of fake gold and silver, relatively, it's probably a small market, but it is still an important market for some, for the ones making these fake gold coins and silver coins and bars. And we hear about this at regular intervals. So a few years ago, I was in Australia, and a news team came and interviewed me. They just been and filmed covertly in a gold factory where they make fake gold bars, and they had all the right markings of the major refiners, Swiss refiners, Australian refiners, US refiners, and on the surface they look perfect for a layman, certainly. And this team actually bought $500,000 worth of gold for $500. So at least they were not pretending. The factory didn't pretend to sell it at full gold price to them, but they would go onto the market at full gold price, of course. Mm-hmm. So this was fake. And then I had a business acquaintance who recently bought from China, and he knew that they probably were fake. So he tested it. He bought silver coins from China, not for a big amount, and then he took them back and tested them. And they were all fake. There was just a little silver coating, and then they were all U.S. coins. They looked good on the surface. Mm-hmm. So as the gold and silver prices go up, fake gold and silver is going to become much more prevalent, because there are always people who will take advantage of this, whether it's in China or in other states in the same region of Asia. And that's investors must be so careful. Don't buy coins from somebody that hasn't been around for a long time and who is a reputable dealer. If you can have the coins or bars, or have them tested. We are within this chain of integrity that, for example, we buy gold bars from a Swiss refiner. We always buy new, fresh gold bars for the clients. And from a Swiss refiner, which refines 70% of all the gold bars in the world, so they have the highest reputation. But if then let's say that the buyer, our client, decides to sell the next day, it doesn't happen. But theoretically, if it did, even if they're still sealed the bars, etc., they go back. We sell it back to the refiner always. We don't sell it to another client, and the refiner will melt all of those bars down, although they haven't even been opened. But that's because the chain of integrity is such that the Swiss refiner will never let gold out of the factory that they haven't actually refined before they send it out. So even if they had refined it a few days earlier, it doesn't count, because it's gone out of the factory and come back. Then they don't take the risk. And so that's the kind of gold people should buy. Now, if there are dealers who are very reputable, who've been around for many, many years, yes, I'm sure that that's possible to buy from them also. But people have got to be very careful not to just go buy any gold anywhere, and certainly not on mail order. Absolutely not. Or silver. The same. Don't buy it on mail order, whether it's from China or locally. But don't do that.
Mm-hmm. So, Egon, we've seen a recent, as you were calling it in your article, a David versus Goliath situation play out, as you mentioned before, in the GameStop stock, which I'm sure most people are aware of by now. So some have set their sights on silver as it is a commodity with the largest short position by big 8 commercials. So what are some of the forces that are at play against these guys?
Sorry, against the guys who are speculating? You mean the Reddit guys, the GameStop speculators? You were talking about these guys?
Absolutely.
Well, as we saw now with GameStop, it worked for a little while because they took the hedge funds by surprise, and a lot of them had to take big losses. And on paper, a lot of these traders had very, very big profits. These Wall Street Bets group. But of course, now it's all gone down again. And a lot of those, if they didn't take profit, they're now sitting on big losses. Now, so the market then talked about, well, the same guys are now going to take on the silver market because there are massive shorts in that market. And therefore, that market is also vulnerable to this kind of attack of a big group of smaller traders. And but the total of that will be very big, and they will attack the silver market and again take out the shorts. So because if people start asking for delivery, of course there isn't any silver to deliver against these paper shorts. The problem is, as I mentioned in my article, of course, it sounds fantastic and romantic and adventurous and all of that. We'd love to see it, but against them, they have the BIS, the Bank of International Settlement. They have all the central banks or the major central banks, and they have the bullion banks. That is unlimited firepower. And therefore, as I said before, the BIS or the central banks, they can just create unlimited amounts of money and then in the paper market continue to sell gold and silver. Of course, it increases the bubble that one day will burst in this paper precious metals market. But until then, they can certainly stop speculators in the short term. So I said, I think it's unlikely that it will happen this time, and so far they haven't succeeded. Silver went up over 10% or 15% for a day or so, and then it came back down again. But I think it's still the gold-silver ratio is coming down, which is a sign that silver is leading. Gold went up a bit and came back down to where it was. Silver is still up. But the gold-silver ratio is in a clear downtrend. It's gone from the high of a year ago, for a high of 100 almost 130. The ratio down to around 68 today, and that's going to continue down to, in my view, most probably to the 30 where we were in 2011. It might stop there for a while, but then it probably will reach the historical average of 15. So it's a long way to go. So silver is leading, has been leading now for over a year, and that is a sign that the metals are in an uptrend. So never mind if these raids or attacks on the short paper short will succeed. I don't think they will in the short term. But the fact that the amount of paper, silver especially, and gold outstanding, in the long run, when people realize that they are going to be worthless, these paper contracts, and therefore they ask for delivery, then that market will fail. So that will still happen, and therefore, you should not trade these markets in anything but physical. Because ETFs are not physical. I've written articles about GLD. It's not physical. That is also paper contracts, and this is gold primarily that is being lent by central banks to the bullion banks, etc. So therefore, just buy real physical gold and hold it in your own possession or store it that way you have access to it. That's the only way to hold these assets, because the paper markets are going to blow up at some point.
So even if you don't think that these, let's say, short sellers can take on, the BIS, the bullion banks, and the big commercial banks, could this serve as a catalyst to really start pushing the silver price higher, though?
I think it is. So that's another catalyst. You're right. That's what we saw now. So we saw the big move up in silver. And now we see the correction, but the trend is up. The trend is strongly up in silver, regardless of who attacks the market. Both the trend, the medium term, the daily, the weekly, the monthly, even quarterly trend is up. And the same, the quarterly trend in the gold-silver ratio is down. So therefore, the long term is now moving in the direction of much higher metals, and with silver leading. And as I said, going up faster than gold, still will go up at least twice as fast as gold which is automatic. If you go from 68 to 30 in the gold silver ratio, means that silver will go up twice as fast. And I expect that to happen in the next few years. Things can move quickly when they start, but as I said, I've been patient. We went into gold in a major way in 2002 at $300, and I've seen the trend has always been up, but I've seen many pullbacks and major pullbacks during that time. Hasn't changed our position. It hasn't changed my mind. Nobody of our type of investor, they're long-term investors, they don't sell. We don't sell. And we sit out these corrections because we know that the central banks are our best friends in this game, and governments, because we know that they will continue to overspend. We know that they're going to continue to print money and debase the value of the currencies, and that will be beneficial for gold and silver, of course.
Excellent, Egon. As you've highlighted, patience is key here. Is there anything else you'd like to mention as we wrap up?
Well, I often say, because I've been around a long time, and I'm very grateful for having had a very good life. On top of that, if we live here in Europe or in the US, during our lifetime, I was born just at the end of the Second World War, so I haven't experienced a war. We've had peaceful times, and we have had very prosperous times. Now they're too prosperous because they're not based on real values, but nevertheless, it's been very easy for everybody. This period, as I said, the post World War II period, it's been very easy for most people in the West. Now we're all having a difficult time because of the coronavirus. Some people are suffering economically very badly, and some people are not suffering at all. But I always say that sure, you got to look after your wealth and protect it in the best way you can. But there are so many other things in life which are free and so wonderful. And I take nature. Is one of them. Just being out in nature, connecting with nature, good friends, close family. And really, it's important to keep a close family group, especially in the difficult times we expect. Music is free, books are free. Mountains is great for your health, and I'm here near a mountain, and it's very good for your health also. So there are so many other values. So what we are saying really is, if you have the ability, at whatever level, protect your money with a bit of gold and silver, but then really focus on looking after your friends and family and helping other people, because that's what life is all about. Money is something that we need to eat and to have a roof over our head. But then thereafter, as I said, that there are so many values that are more important, and people should really focus on those.
Excellent advice, Egon. Thank you. Of course, we can find more about you and the articles that you post at goldswitzerland.com and also at goldswitzerland on Twitter. Anywhere else?
Yes, no, that's it. That's enough.
Perfect. Thanks very much for your time today, Egon.
Tom, good to speak to you. Thanks very much.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.